So I made a video yesterday explaining what I'm about to go through right now, and maybe I'll put it right here real quick. But so Bitcoin obviously had a little hiccup today, but I just want to explain to people what goes on. You hear the different waves. Well, there's one here. Number two is, well, this is the third one because there's one way back. But there's something called a hyperwave, and I will go through it really quick. But basically, what happened back here when we reached 18,000, it crashed, came all the way back, and filled all the gaps it needed to fill. And then you can see in here, it sort of struggled. Once it got above the high, it ran up really fast. And then it shot up to, I think, 64,000. And then basically came back down, went all the way back up to the high, 69,000, and then shot all the way back down in this 7. And it filled this gap. This gap down here, you can't have that. The markets always fix themselves. So once it came down, it fluttered, and then finally, once it took off past this point, it came back up, all-time highs again. And now here we are, boom, boom, boom. This is when Trump got elected. And now what's going on is we've got this huge gap again. And this gap haunts us unless it comes back now and fills itself. If it fills in here, we are golden. Then the next rally really starts up here. But right now, if we take off from here and we don't come back out and test it, it's going to be a nightmare later because they always come back to test where they need to fill the gaps. And I can show that on many different charts. I'll go through a couple different now, but literally, let's show you this really quick. This is the weekly chart we're on right now, but the daily chart, you can see more of exactly what happened. And let me get bigger here. Shoot. So, once it shot up here, it stayed above, hit this line, which I can show you on the previous charts. It lines up with the past two hyperwave highs. And then it came back, tested it again. Once it came down here and tested this blue line, and then this right here was major support. It broke. Now the next major support is here, around 81,000. But to be honest, the best thing that could ever happen would for it to fall for a week or two, touch this line once, or get really, really close to it. Maybe right even in here, 73,000 would maybe suffice. There's enough going on back here. But let's just say, right around here would be 72,000. So if it can touch that, then everything will be good in the future, and the actual next wave starts up here. But right now, we are just in a different place that I'm going to show you right now. So here's the 10-year bond. This is the longest hyperwave in the history of the stock market. So it started in like 1963 or so. It had its gradual number 2 phase, and then it shoots up a little bit more, number 3. And then the number 4 phase is almost straight up. 5, 6, and then 7 completes the hyperwave and comes back down to hit where it started. So that's the bond market. This is a 40-year chart from this point to this point. And you can look at the Japanese market too, that they had a 25, 30-year collapse just the same way. So here is the triple Qs, which is scary because if you look at it, you can see the dot-com bubble. This was a hyperwave also. It crashed. I personally lost $1 million back then. I was a financial advisor right here and quit the month before the bank crisis happened. And this is just a minor blip now. Back then it was a huge deal, but look how small it is compared to where we are now. So from this point on, you basically see the 2, the 3, the 4, 5, and this could be considered the 6. And now we're on the 7. I could also look at it 2 different ways and just say that we're still in the 4, but I think this is the fake out. But most of the time hyperwaves never make it past the all-time high. They would stop here and crash, but they printed $9 trillion from right here to right here. So that's the only reason we haven't crashed. If we didn't print money right here in the 2020 lockdowns, it would have come back and tested this point right here that was left from this high and then the bank crisis. So right here, it never tested down there, but we might be okay. Never come back down that low, but it should have. Right here, it should have come down, fixed everything, and then when it took off, it would have been around here. bank fail, we would have just probably been someplace in this range by now. But instead, this was 9 trillion over here. I think they spent 5 trillion right here, and then it crashed. They didn't let it come down and fill this gap. And 9 trillion later, here we are. And it's about to burst at the seams. You can see right here, relative strength. Back where this is, you can see how that was high. Right now, look how much higher the market is, but the relative strength is right at the same line, and it's turning, and it's about to turn down. And I'll show you what just happened in the S&P. So you can see in the S&P how the dot-com bubble wasn't as drastic because the triple Qs is just full of tech companies. So the S&P though fell and they came down here. This is the beginning of the new hyperwave right here. So you've got a gradual increase to 2, you got the 3, and then from here you've got the 4. And then as it turns, this is going to be the 5, and then the 6 will bring us somewhere over here someplace. Maybe it'll get back to all-time highs, maybe it'll get close, but I'm expecting after that to come down and fill this gap at least. But really eventually it's going to probably come back down again to somewhere in this range. And I know it sounds crazy, but you can look at charts from the past and all kinds of different stocks, and it happens. Bitcoin, it happened for 3 times already, and right now people don't want to believe it, but the truth is it happened here, it happened here, and it will happen here if it doesn't come down and touch. If it touches, then it may not be a hyperwave, and it might just go up and just like normal stocks do. But hyperwaves are very specific, and there's only so many Tyler Jenks had found before he wrote the book. He had found 50 of them, and that's what drew him to Bitcoin, because he saw in 2018 that it was going through a hyperwave where he told everybody, and I actually sold at 18,000 before it crashed. So he helped me through that. Then I still lost 400 grand on Stellar because I put my money into that like a fool. But that was, 2018. We didn't know it was coming. And I was just learning about the hyperwave. And now I didn't even touch this market because I knew what was going on. And right now I'm just trying to explain to people why it's better if it comes down and just taps and then takes off, because then we don't have to go through this pain. You just got to fill the gaps. That's what the market wants. The market's efficient, just the way it is. Have a great day. If you guys got any questions, let me know. I love answering questions with stocks and charts.